Welcome to Finbot Insights. Today, we are going to deconstruct a single provocative statement, one that questions the very future of a cornerstone of modern investing. This is the central question posed by our source material. It's a question that should make every investor pause. So let's break it down piece by piece to really understand what the implications might be for you. The argument begins by setting aside a common debate, one that our source claims is, frankly, a complete distraction from the real issue. First, let's consider the Vanguard Total Stock Market ETF, ticker VTI. Its purpose is straightforward: to give an investor exposure to the entire U.S. stock market, every single publicly traded company. And on the other side of this debate, we have its very popular cousin, the Vanguard S&P 500 ETF, ticker VOO. Now, this one is more focused. It tracks just the 500 largest U.S. companies that make up the S&P 500 index. But here is the crucial point. When you actually compare them, their structural similarity is impossible to ignore. Because both funds are weighted by market capitalization, those 500 giants in VOO make up more than 80% of VTI's total value. The practical distinction between the two, well, it becomes almost purely academic. And it is for this very reason that the source dismisses the entire debate. It's presented as a choice that truly doesn't matter. The argument is that agonizing over VTI versus VOO will not meaningfully impact your portfolio's outcome. So, having dispensed with that preliminary argument, the source makes a very deliberate temporal shift. It asks us to jump forward from the present day to a specific point in the very near future. And this is not just a stylistic flourish, it is absolutely critical to the core thesis. This rhetorical move frames the central idea not as some distant, hazy prediction, but as an established fact, a reality we are observing from the vantage point of the year 2026. It is from this future perspective that the source delivers its truly disruptive argument. This is where the analysis gets very interesting. The claim takes aim at what is arguably the bedrock of modern portfolio construction. We are talking about an asset class that is a core holding for almost everyone, from the newest retail investor to the largest institutional funds. And the assertion itself is completely unambiguous. It states that the S&P 500 is a long outdated investment, not just underperforming, mind you, but outdated, a relic of a bygone era. However, before we go any further, it is vital to understand that this bold claim is not a blanket condemnation. It comes with a very specific, very important qualifier that dramatically narrows its scope. The argument is laser-focused on one particular strategy: buy and hold. This is, of course, the classic passive investment approach, the one championed for decades as the simplest path to long-term wealth. And that refinement is perhaps the most critical part of this entire statement. The source is not claiming the S&P 500 is useless for everything, say for short-term trading or as an economic benchmark. No, the critique is aimed squarely at its usefulness as a tool for passive long-term wealth creation. So after carefully deconstructing the statement, we find ourselves not with a neat conclusion, but with a profound intellectual challenge. The source gives us the what, the provocative conclusion, but it withholds the why. It leaves us with the question: what could possibly happen to make this so? It forces us, as investors, to think deeply about the potential structural, economic, or even technological shifts that could actually render the S&P 500 obsolete for its primary purpose. That is the intellectual work left for us to do. Before you begin that work, it is imperative to remember the following. This analysis is an intellectual exercise. It is not, under any circumstances, financial advice. You are responsible for forming your own conclusions through your own rigorous and independent research. You absolutely should not place your trust in social media influencers, including this channel. If, however, you value this kind of analytical perspective, then please do like this video and subscribe to Finbot Insights.